How's everybody doing? Today I'll be going over my oil outlook and how I'm going to be trading it and how I'll be using it as a hedge for the future. To make it simple, oil is going to go back up to $100 and possibly stay at those high prices for longer, which would validate my conclusion on the oil trade. Moving forward, all right, so in 2020, who remembers this fool, Klaus Schwab, however you say his name. But anyways, in the World Economic Forum, he said that in the future you're not going to own anything, you're going to be happy, and also one of the really big things was that there's going to be huge wealth transfer in the future. And this is going to tie into how oil is going to be part of that. At least it's not going to be the driving factor, but it's going to be a pillar to for them to accomplish this goal that they're trying. Of course, it's a prediction, but I mean, if that's the plan, is it really a prediction, right? Here's the thing with oil: if oil continues to go higher and stay at these higher prices for longer, this would definitely help make this into reality for them. And of course, for the short term, we have the war going on. Of course, we have the Strait of Hormuz closed. All the basics of that everybody's watching, right? And of course, we have some experts starting to talk about the long-term effects. What's going to happen when this is over? What is the damage? But even just now, we have increasing uncertainty over U.S. and Iran talks, so that's gonna bring oil to higher prices. And also we have just uncertainty over Iran. Trump keeps saying ceasefire. Trump's just been saying a lot of things and not taking it seriously. If this article is true, that means China's not even taking Trump seriously. Nobody's taking Trump seriously right now, which is gonna, in my opinion, give more fuel that this war is gonna get dragged on for longer, right? And if it gets dragged on for longer, then oil prices are gonna go higher. But also, the longer it gets dragged out, the more likely that these high oil prices are gonna stay at these high premiums for longer, okay? And even right now, how the war has developed currently, just by the damage itself, it's already major. Like, even when we look here, if we get the calculations of how much has been destroyed in the conflict, there have been over 58 billion in losses. Refineries are halted just everywhere. Everybody is going to get affected in the long run, right? But if we all know this, there's going to be some effect after this. We're not just going to go back to normal. So for me, to what's going to give me the confirmation of my conclusion of what they're planning to do as using oil as a tool to do the wealth transfer and to do for you to not own anything, we need oil to stay at a high price for longer, because everybody's anticipating that oil is going to drop. We're going to go back to stable prices. But what if it doesn't? What if we stay above 100 for months, maybe years? The longer it takes at these higher prices, the more affected every single economy in the world is going to be suffering. And if the people who's going to suffer are going to be the everyday people, being you, the big billionaire hedge fund man. No, sorry, the big billionaire corporations are the ones taking your wealth because they get to sell you at these high premiums. Going on the idea that energy is going to stay higher for longer, even here it says it's going to take years to recover what has even been destroyed, and the war keeps going. It's still going, so who knows what if it lasts for 2 or 3 years. Yes, like, imagine what's going to be destroyed then. So this is fueling the idea that oil is going to stay higher for longer. So the whole basis of my oil trade and my oil thesis and the hedge I'm building is going off that, yes, I do think oil is going to go above $100 again, but mainly that I think it's going to stay at these high prices for longer, which is going to incentivize to maybe go to 120, 140. I could see it going there. And look, guys, this is a really serious thing. So if gas and oil prices stay higher for longer, everything in the world, everything you love and known is transported by oil or uses oil in some type of way. Maybe in manufacturing, delivery, product creation, but everything you love and know, even TV shows that get created, they use oil. So if oil prices stay higher for longer, then things are going to inflate astronomically. Like right now, my father's in the moving business, and currently with how the gas prices are going, he has to pay for his own price. But when he prices the customer, since there's huge price hikes, there's contracts where, hey, for this year, I'm going to charge you for the price payment for the gas, right? The gas fee. It's going to be at $3.50. Right now, diesel is at $5. Now imagine if it keeps on staying at $5 or $6. Of course, right now at the moment, it's going to be hurting my dad's company because he's going to be paying higher gas when the contract is paying less on oil. But once the contract gets renewed and gas, let's say diesel's at $7, $6, $8, I'm pretty sure if the moving business is doing this that uses trucks all over America, I'm sure every company and business is doing this with freight, shipping, and anything. So there's going to be a point in time when all these companies, all these manufacturers are going to have to renew their contracts, and they have to take to consideration the price of oil in those contracts. And now if gas is 2, 3 times higher than it is now, what do you think what do you think is going to happen to every single product that you know in life, right? Inflation will pretty much go through the roof. Everything will get super expensive, which goes into the idea of the wealth transfer. Who's going to benefit off of this? Obviously, the corporations, the grocery stores, the oil manufacturers, the billionaire corporations. They're going to benefit off of this because, of course, they have a stock of inventory. They're not buying all their inventory at that very moment in these high premiums, right? Sorry, camera glitch. But so that is how they're transferring the wealth out of the everyday people into back into the 1% that there already is. And to add on top of that, it's going to cause assets, housing, everything else to go up in value astronomically. So pretty much the whole idea of the haves or have-nots, the people that don't have assets, that don't have anything invested, and yet physical assets, they're going to be left behind gruesomely because you're going to get violated with the oil prices, not only on your gas pump, but on everything you pay, on everything you buy, everything you eat, just for living. Like they're even gonna, I'm pretty sure they're gonna increase the subscription of like Netflix and all this shit, right? So, but at the end of the day, once everything settles and the wealth transfer has already happened, people's already been spending their money, getting violated, and all that profits are going back to the same corporations. And once, because guys, eventually, if this is not going to take us to apocalypse, this is going to settle eventually. We're going to eventually have no war. Interest rates are going to start getting cut. It might be this year, next year, who knows? It really depends on how this year plays out. But pretty much make it simple. Once everything settles and the wealth transfers happen, and people lost a lot of shit, their purchasing powers to the ground, that's when the wealth that's been transferred is now going to grow exponentially and cause that big gap. Because a lot of times when that gap really happens, even the Great Depression that made a lot of wealthy people, wealth is being transferred, but once the boom started and everything settled and things started picking up, that gap of wealth that was growing grew 5, 6, 7 times faster than the average person, pretty much. And if you're wondering why assets will be much higher than they are now, it's because just like the example I gave you about my dad's company, how when they build, they have a gas fee. And that's going to be for everything. Imagine construction, imagine new homes in 2 or 3 years from now, where now they have to value the home in the current gas prices. It's going to be like a hidden fee because obviously they don't take that to the calculations. But if they're building a home and it starts from the builders have to buy from the lumber company, have to buy the equipment, and those equipments are delivering those supplies on truck with oil. So they're putting that tax onto them, of course, and then they have to charge higher onto the builders and then the builders. So of course it's not like, oh, this is gonna be a fee because of higher oil. It's just gonna be a trickle down effect, okay? So that's why these assets will blow up in value, because now when 2 or 5 years from now, if oil stays higher, we never go down this low again. What if this is the lowest where we're going to see gas prices? Then those assets are going to be 5, 6 times higher than what they're really worth, because when they were built and priced in, it was when oil was very cheap. Hope that started to make sense. But to make a long story short, that's my oil thesis. How long do I think this is going to play out? Maybe for the rest of the year, who knows? But overall, I do think we're going to go above $100 again. And if we stay above $100 or from $90 to $100 for an extended period of time, then it's gonna give me more better news that oil's gonna go higher, and validate this idea of the wealth transfer. Of course, it's just a theory to my thesis, but kind of what makes sense right now. As things develop, I might switch it, but so far this is what I'm building on, validating and pretty much giving me the reason why I'm gonna get into this oil trade hedge. Okay, I'm moving to the bread and butter, to the charts. So I'm building this oil hedge. I'm taking 1K margin. This is how much I'm gonna risk on the trade. I'm gonna use 3x, so it's gonna be 3K total position size. And I've already been building up this trade. As you can see right here, I already have $360 in the position. Of course, I've been trading this, buying, selling it. So sometimes I'll have my full 1K position in, but then I'll take 25%, add lower. But as you can see right now, I have 360 position entry at $90.83. And yeah, I'm up 10% right now. I took profit earlier today. I was seeing weakness and might as well, when you see profit, it doesn't hurt to take a little bit off the top, right? So now we're back. This is a yearly time frame. So if you watch my previous video on the weekly outlook or my outlook for crypto, I did my TA on my analysis using the structure and order blocks and stuff like that. I'm gonna do the same method with oil. Okay, so this is Brent oil futures on the yearly time frame. I know we're very zoomed out, but let's pull up our yearly structure. Obviously, there's an up, down. We had a sweep of these lows, created a new high, and then down, right? We SFP'd this high. Technically, now if we get a yearly close, of course, that's 8 months. That's how we're gonna zoom in and get an earlier confirmation. But pretty much, if we get this year 2020, 2026, we're in 2026, right? If we get close above $102, if we close this year above $102, it's gonna validate my idea that oil is gonna go higher and happen with that prediction that Klaus Schwab said, and it's going to fuel that move, right? Because we have an unmitigated zone up here, and we have this high at 165. Because if we're going based off structure, then we have to target the highs. Obviously, if we get that close, we're going to get a pullback. But at the end of the day, going based off structure trading, you would target this high. Do I think it's going to go to 240? I don't know. But if we do get that closure above, if we haven't tapped it by then, we're for sure going to go up to like 160, 150. I could confidently say that at this moment, right? So now zoomed in on the monthly time frame. As you can see, this is that high, that $102 that the yearly needs to close. We swept it. We didn't get a full candle close on the monthly, which is good sign to indicate that we're going to go lower. So in this move up, we do have a gap right here between $65 and $62, which later on when I go over my position currently in my hedge, this is like an area where I'm adding my last 40%. If you know me, I enter every trade using the 20-20-20-40 method. 20%, 20%, 20%, last position, 40%, rest of your margin. So if we're gonna do the 1K max margin for this position, that means it will be $200, $200, $200. So let's say like 200 right here, 200 right here, 200 right here. Now that would be $600, and I have $400 left over for this 1K. I will use that 1K for another like quick sweep down to go back up higher, because I'm really bad at getting lows. I'm really ass at catching highs. So this helps me catch the broad move, because there's been many times where my thesis is right, but I get wigged out or I get stopped out, and it goes into my favor. But I'm not in the trade no more, so it doesn't really matter. But anyways, what do we see what happened here? We took liquidity here. This is an order block. This flipped bullishly because now this closed above this high. So it did technically close bullishly, full candle close right there. So now technically internally, even though on the higher time frame it has not been validated yet, it's going to be 8 months from now, but this is on the monthly. So technically in the monthly time frame in this move up, we are bullish and we are likely going to come take this high, right? Right now in this current state, the invalidation low will be $45 to $50. And if we get that low, then it doesn't look right. Like that would be a quick move down, like a very steep. If we go straight to the 45, there's going to be little bounces along the way, right? So obviously I do think that since we get in this SFP and we're going to get the pullback, we're going to pull back into this monthly order block. Maybe sweep out these lows real quick, do a W, and then get out of here into this order block up here around 140 and 150. And we're now on the weekly time frame, and when we zoom into this $50 low, which would invalidate it on the monthly based on structure, let's zoom in, let's see how this internal structure is looking like on the weekly. What do we see? So of course we see these gaps, and usually on traditional assets they usually recover the gaps. I take it as like TP zones, right? But even then, underneath the gap, if we look at the structure, we had right here on the lows, where is my tool? Okay, we had a W formation, break of structure, retrace, continuation. Okay, so down here below we have an order block right here that did not get mitigated, and right here. So that's why I use this whole zone. You can see with this block right here, from this low to this high, and I just put the little mid range because to me this whole range would be a valid area to look for a long, and we have that gap now. Okay, so now let's zoom in even more. Let's see how the internal range is looking in this internal structure, right? Let's go turn on my 4-hour structure and let's zoom in to the 4-hour, see what we're seeing. Okay, let me turn off the weekly because it's a little bit too much on the screen. All right, so what is happening here? Okay, let me turn on the weekly real quick so this stays on. Yeah, let me turn this off. Too much. Okay. Okay. So what do we see happen? So that first pullback, when we look here on the weekly time frame, it was this first pullback right here. This first one, or I think it's this one. On the weekly it looks weird, but this first pullback right here. Let's go into, sorry, I'm tripping out, but all right. That low on the weekly time frame that I showed you was the invalidation low on this move up, because of course we had that rise retrace, and we are now continuing, dang, I can't talk, guys, bullish structure, right? Rise, retrace, continuation, took it. We had a low mini one, the rise, retrace, continuation. But now this whole move is now a rise, retrace. If this was gonna fail, we had to get closes underneath here, which on the 4-hour and on the daily time frame, we just wicked it out, SFP. And on the 4-hour, what happened? We had an SFP break of structure. And if you know me, one of my biggest entry models is a SFP break of structure, internal break. Once we get that internal structure break, then you could easily target the highs at $102, or easily get a TP at $94, $95. Okay, so in this move, since this was gonna validate or confirm the move lower, we got the wick, broke structure locally on the 4-hour, and now internally here we're going higher in the first retrace, right? So now this could possibly be the retrace to the continuation. We have this high here and that weekly high and imbalances and a bunch of liquidity above that we could attack easy. But I hope you kind of see what I'm saying. This retrace can easily be oil's continuation to go above target at $120, which is why I'm building this oil trade now. Okay, now zoomed in onto the 1 hour. Remember, we are in that down move. This is that SFP. Remember when we zoom out to the 4-hour? This is that high, right? So when we zoom into the 1 hour, if you're not currently in an oil trade, technically we did. This is one of those things where it's hard, and this is why I always do the entry model that I do. Like moments like this, maybe you might not get the extra move down. Technically, we do have an unmitigated zone below that we could come down and put along here. Or we could just blow out of here and continue higher, and then you're just waiting for a buy. So this is why I do the entry I do, which is I put my 20% here, and then another 20 if I see clear breakout of here, confirmation, and I add the rest of my position. But anyways, so right now, obviously, if we start getting closes underneath $85, yes, we're gonna come down to the last zone, which is pretty much $82 to 83. This would be the last unmitigated order block, and then we're gonna come down to the 78 low, which I think if we visit it again, it's not gonna hold, and we're gonna go lower, which is why right now in my position on right here on my position, I do technically have $350. So if I was doing the $1,000 position, I have 25%. No, I have 30% on my position in currently of the 1,000 because I took profit. I originally had around 3 of my entries in. I only had the last 40%, but just to be safe. So right now, my current position where I'm in now, I'm not gonna add any more until my entry is right here. Right, where is my long entry? Whoa, let me fix that for you. Okay, well anyways, my entry was right here. It's at $90 and $50. This is my entry now, right? Since currently in my trade, I have 30% of my position in. If I see something like this, a break out of here, clear break, and we start accumulating up here, then I will add my remaining, sorry, let me get my face in here. I will be adding my remaining 30% to make it the 3 buy orders, right? So now technically if I add my remaining 30%, then I will have 60% of my position in. And if I have 60%, then I have my last 40. And how I would treat my last 40, obviously this will bring my entry higher, is if we see a clear continuation, because if we're gonna get consolidation up here, let's say we're gonna get consolidation, there's gonna be a retrace continuation. This break after I add my rest 30%, this clear break is when I'm gonna add my last 40% of the trade, and this is how I do it. Once I add my last 40, because I don't put stop losses or anything like that, I have invalidation levels. Once I have 100% of my position in, that's when I put stop losses in the trade, okay? But that's how I play it. Or on the downside, if we go down lower, our validation on this uptrend is at $87. But I think if we see, since we have this unmitigated zone, if we zoom in, I could easily see us do this. If we see this, I'm gonna be adding 20% to my position. Since we have this unmitigated zone, we can easily come down, tap into the zone because we have a bunch of lows, convince people we are going lower because we broke structure technically, but we have this unmitigated zone, quick W formation, and then move out of here. If we get this, yes, I'm going long, or I'm adding more to I'm adding 20%, and then I'm adding my last 10% to maybe a little bit more into my 40% at this last unmitigated block that we have here, this last one, because this right here, because this block there, this is how I kind of measure out which blocks are important or not important, right? So let's say we zoom in right here, this is what's the first block, right? Let me not get this extended. Boom. Technically, this new pull back into the block. So now the new block would be here. So this was already tapped into it, right? Move up on the pullback. We did get a tappage, but it's very, very faint. But we zoom in, we tapped into it, right? And then on this new pullback, on this new block, same thing. We broke out and tapped into it. But then on this block right here, price has not came back when we broke out of here, has not came back and tapped it again to fill any of it. So that's why I put a lot of weight here. If we lose this, then obviously these is just ugly lows, which I usually use the arch tool to kind of give me like liquidity. I would see this as liquidity, and if we close underneath here, then it's just gonna go straight down and to the low of the range, pretty much. But that's how I identify these blocks, because I'm not just taking any regular block here. Like the reason why I'm not using certain blocks is because it already got tapped into it, and if we go there again or we revisit to that block, then it already invalidates what the current price action is moving towards. And even here on my notes, I have it all planned out. You see on my Notion, I haven't updated it because I took profit. Originally, this was where I said I had 50% to almost the 3 buy positions. Before I updated it, I have $525 in margin, right? But of course I took profit and all that good stuff, right? But I'm updating this in real time, and this is my hedge play for the high risk assets, right? So, and this is one last thing I want to show you guys to validate the idea that we are going to go higher, because we are consolidating and finding support in very critical areas. So this is VWAP, obviously POC. These are volume profiles, and you're wondering, well, what's cool with these volume profiles? Let's zoom out and where I'm pulling them from. This is from the very all-time high to the current date. This volume profile from the current low to this current date, the very low and the very high. And what do you see when we zoom in, right? What is just based off the theory of VWAP and volume profile, we are now in a cluster of our local value area high and the macro value area high, and we're trading above the VWAP from the all-time high. Major support and the macro POC, we are finding support here. So what this is telling me is pretty clear. This is your range currently. This is if, oops, whoa. This is your current range. Zoom into the daily. Boom. Let's look into this right here. This is your current range. We are in the discount section of the range, so if you're going based off the idea of the range trading and only buying in discount, this is a really good time to put your 20%, because even if we lose this low, right, over here on the weekly, what was it, wasn't the weekly? Even if we lose this low with all the value area high, if we lose this, the next area is going to be that gap that we saw on the weekly structure, which if we turn on the weekly structure, this gap, and what's near this gap also. If we turn back our volume profiles and all that, we have the POC of the current move from the very low to the very time we are right now. So even if we lose this, I could easily see us do something like this, following my same thesis that we're gonna actually go higher and take out this high right here at 115, right? We're gonna come down here, fill this order block, fill this gap, accumulate, and then go higher. And more than likely, this VWAP from down below is gonna be start curving up, and we're gonna get the last long if we get that right, because anything can happen. I can't predict the future. Okay, so I can only plan to what's happening, and this is why in this current range, I'm not putting my full 1,000 dang, I'm not putting my full 1K position. So in this current range that we're in, that I'm talking about, this current range, I will only have 60% of my position. So I will have $600 in always all the time. If we close it underneath here, I'm gonna save my last 40 for this zone right here, the last 40% here. And as you can see back in my, when you look into my oil trading on Hype, I've been taking profit. So I've already been taking profit along the way, and I've been gaining, gains on this accumulation or accumulating, right? And here's the thing, this is for a lot of the high risk assets, because on the short term, I do think if oil keeps going higher, it's gonna bring a lot of high risk assets down. Okay, so if that's gonna happen, then this is kind of like my hedge play for that. I am more, disclaimer, I am more heavily on the higher risk assets, as in crypto, stocks, and stuff like that. But instead of selling or opening up short trades, because I don't really like opening up short trades like that, if those are going down, and I'm just using oil as the hedge for that, because if those are going down, then more likely oil is going to be going up because of the uncertain times, and specifically what's going on now. And this is why I'm using oil more than just getting into gold and silver. I do have gold and silver positions open, but I am building this oil position for the current thesis that I just said, right? Which is to give a quick, bring it all together conclusion. Yeah, just what the war is going on, everything is uncertain. You can't really trust Trump about the ceasefires and stuff like that. I mean, every single one's been broken, more problems. A lot of facilities has been destroyed already, so this is going to cause an effect. It's going to cause a pretty long-term effect. It's already, now they're saying bare minimum 5 years, and the war is still going. So my whole conclusion is that oil is going to go above $100 again, which is why I'm buying at these ranges, and I'm going to keep taking profit above $100. But on the long term, if we stay higher at these higher prices, then it would be the perfect fuel to do the Klaus Schwab's thesis of you owning nothing and the great wealth transfer, which now you're saying like, well, if that happens, what's going to happen to crypto and everything else? In the short term, if this is true, if it's going to play out like this, then high risk assets, crypto stocks are going to struggle. But once, like I said, once everything's settled and the wealth transfer has already been transferred to these stocks and to these investments that these big corporations are doing, then once things settled and the economy starts working up again, interest rates starts getting cut, then that's when all your high risk assets are going to blow. It's going to be the craziest bull run that we've seen in a minute. So yeah, I hope you enjoyed. I hope that makes sense. Please comment down below anything just any opinions about what I said, if it made any sense, or it maybe ideas that I'm missing something, or maybe I'm completely wrong. Whatever it is, comment down below. I'm happy to have discussion. And don't forget to go into my YouTube channel, go into the link, and right here I have my Instagram, my Discord, and Twitter, all that. Well, if it loads, but anyways, you saw it anyways. It's right here. But anyways, yeah. So I'm mostly active on Twitter, Discord. As I get more people, I'm gonna do private lives and start teaching one on one. But I'm not doing it now because not a lot of activity. But hope you guys enjoyed. I'll see you guys on the next one, and trade safe, guys.